Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast Episode 37. It is Friday, my dudes. Today's date is August 31st, 2018. We got our end of the month August report. My name is Nathan Oliphant, and with me, as always, the glorious, gluten-free Jason Bessing back from vacation.
The gluten-free Jason Bessing. Nathan, what's going on, man? I missed you, and I've been so excited to do another episode. I literally been thinking about it all week.
I'm just glad
whilst on my beautiful vacation.
I'm just glad I don't have to contact you through Facebook anymore.
Yeah, that is kind of annoying. Anyone who is a cruiser or wants to be a cruiser, your internet, you just got to be able to let it go for a little bit. But it is nice to be able to shoot some messages back and forth. You able to keep me into the markets a little bit. My Robinhood account would just not load at all.
Did you not have internet?
It took forever. So like certain things work better than others, and I really think they do that because they manipulate their Wi-Fi.
Yeah.
And like, for example, they won't let you stream anything.
What? That's so stupid.
Yeah. So it blocks all Netflix and Hulu. And because of that, I think their Wi-Fi is just really shoddy because there's like so many. I feel like there's a lot of algorithms and holes that your account has to go through in order to check and stuff. And
yeah,
like my sister couldn't
log in the
log
middle of the ocean too.
On top of that, yeah, you're using like these satellite. My sister couldn't log into her own bank account because it said it couldn't establish a secure connection. So it's just shoddy, to be honest. But for whatever reason, they really like Facebook Messenger. That lets it work. I was able to make a couple phone calls through Facebook Messenger. And
that's weird.
Yeah, so interesting. But I am back to reality. And it's always good. It's always good to be home after vacation. It really reminds you what you're working for, you know?
So hit us with the big three. I want the day, I want the week, I want the month.
Oh, I've got. Oh, well, I don't have all that. You would have to give me a few seconds, but I can. Okay, that'd be great. I'm pulling up the Dow right now. We got the Dow closing down 22 points at just shy of 26,000. Nasdaq above 81 today. Woohoo! Here we go, baby. Closing up 21 points, and the S&P closing up like nothing.
It was
just
like
kind
0%. That's what it says.
A different little day there. I've got the Bitcoin currently sitting at 7,050. Nice little ride up from the day. And let's go ahead and check on gold.
Gold?
Who is currently at the time. Oh, you know what? Let me refresh this so I can get you the proper number. Currently, we're sitting at 1201. So, not bad.
Going a little bit up.
And we seem to hold steady along this
all right,
chart.
so here's your week numbers. I'm going to do the S&P first. All right, so the S&P week numbers had a big run up during the week and then kind of sold off. It was up 0.62% on the week. For the month of August, up 3.5%. So that's kick-ass. All right, and the Dow Jones for the week. Dow Jones for the week is up 1.5%, up for the month 2.77%. So, the breadwinner between the two big indices. Yeah, fuck the Nasdaq. I'm not counting them. I don't give a shit.
It's arbitrary, and anyone who likes it is.
We don't include them. But the breadwinner between the two indices, S&P 500 for this month.
So I was out of tune for the past few days. Were there any major market movers? MMMs?
Have you seen?
Do we have
Apple
any big
lately?
companies? I saw Amazon went above 2,000.
Apple's pumping.
Dude, tech is pumping. Do you remember in January I said you are high as fuck if you don't think Apple's going above 200 this year? But the calls were like $600 at the 170 area.
Dude, I bought a vertical spread on Apple today.
Ooh, and you're going to have to jump into that in a little bit. But was there any other major market movers other than Amazon? Headliners. What's going on with Mr. Musk? We're staying public, I heard.
Yeah, he did a blog post or something like that. You want to do market news with Nate? Ba-doop-a-doop-boo-boo.
Like that.
All right,
sag.
we'll start with that. We'll start with that. Elon Musk did a blog post, said he's not doing. I think he's just trying to like cover his ass right now.
Yeah.
So he doesn't get like securities fraud bullshit.
He's going to get hit. I feel like they're just going to hit him financially. He might have to have a monitored account.
I hope he goes to jail. I don't care if he goes to jail for 30 days.
I don't think he will, man. He's some people, I told you before, some people are just above the law, and I think he's one of them. And I hate to say that. But it's reality. That's why that Martin Shkreli kid isn't in prison. That's like locking up an Einstein in the pharmaceutical industry. Maybe not an Einstein, but, you catch my drift.
Sure. Other than that, John McCain died this week. There's just some sad news, not really market affecting. Big news out of Mexico. We're going to news that we were going to enter a new NAFTA agreement with Mexico. Was in cahoots with Trump and the president of Mexico. There was like a phone call. I saw like a little clip of a phone call between the president of Mexico and Trump.
Yeah, they're looking to stretch to a NAFTA deal, right?
Yeah, and they said headlines are saying that Canada is next. So Trudeau, get on your fucking moose.
I also saw one that said Canada in under 90 days. Mm-hmm.
So
let's get this moving, please.
We're either going to smoke Canada out. Have you seen some of the tariffs that Canada puts on us? They're up to like 300%. Some of them are like 300%. I don't know if I'm fucking speaking out my ass or not, but it's unfair.
Huh.
But other than that, just pay attention to that. We're good.
Nothing else major happened. I feel like you're like being gone 4 days, 4 weekdays, and you just feel like, damn, where's all the time gone? But I mean, it was only 4 days. Really, not much really happens. Except intraday. Those intraday pops, baby.
Yeah, Americans had a bunch of like alligator tooth fucking days. Like today's looks like 2 shoulders, no head. What do you call that? Double top? I don't know. Not double tops. I don't even know what the technical term for that is. Like this week has just been like toothy. I don't know.
Toothy week. Nobody likes a toother.
But yeah, market news with Nate.
All right. Today's market terminology. I want to just backtrack. I want to backtrack just a little bit into the spreads. You talked about having an Apple spread, a vertical spread more specifically. Can you inform me, for our terminology du jour, the vertical spread?
Okay, so you can do vertical spreads with puts and calls, and what it entitles is that you sell you buy a call or a put that's out of the money. Let's just do calls, for example, and make it easy.
Make it easy.
Yeah, I feel like calls are just easier to understand. I don't know. So let's say, what you do is you buy an out-of-the-money call, and then you sell a further out-of-the-money call on the same strike, same price, same expiration, or same stock, same expiration. And the idea is, since you're selling a call, you're getting money, you're getting that premium to your account. And when you're buying it, they're taking the money out of your account. So the two offset each other, and you get a reduced price. So you get a reduced risk, but it also puts a cap on how much you can profit.
Mm-hmm. You can't go to the moon.
No, because you're selling that call, and that call has a set profit limit, a profit cap, max profit.
But there's also the max loss.
Yeah, which is the price you paid for the trade, which is the buying the call minus the premium you got for selling the call. So you're like, if you were just to buy a naked call, if you were just to buy the call, you would be putting up more risk or more money than if you sold the call and bought the call at the same time. So you're putting less risk up. I view it as you're putting less risk.
Sides. Yeah, by playing both sides, it's buying insurance on on what you're doing.
Yeah, sort of. That's one way to do it.
And it's a bullish position when you do it with a calls.
Is it? Yeah, I guess so. Yeah, Yeah.
Because you're looking for a spike up. So while you can't go to the moon, there is a cap on how much you can actually make.
Right. Which is...
You're still looking at 100% return. You can double your money, 75%.
Yeah, and when you
get a huge profit.
When you just buy the call, technically the profits are unlimited. But like I've heard some people call it undefined, because is it really unlimited? Is it really going to keep going to 1,000?
Correct. It can't stay within a barrier.
Yeah, so I've heard someone call it undefined. I like that term, undefined profit potential when you buy the naked call. So the max profit is, I don't know if this is somehow calculated, but I read today that the max profit is calculated from the difference of the two strikes. So you take if you're doing the call, you take the strike price of the I said that you had the same strike prices earlier. That's not true. You have one strike price that's lower than the other. You take the higher price that you sold, the strike price. So if it's a $10 stock and you sell the 15 call but you buy the 12, so you have 15, you sold the 15, so the difference between the two calls would be 15 and 12, so that's $3. And then you would take the price you paid for the premiums. So let's say the call you bought cost $100, but the call you sold gave you $50, so it's $50. So it was a $3 difference between the strike prices, correct?
Correct. The 12 strike price that you purchased and the 15 strike price that you sold.
That's a $3 spread. And so you would take that $3 and minus the amount you paid for the trade, and that's your max profit. So in this scenario, what is that? It's 50. It's $250.
Is the maximum you can make.
Yeah, in that scenario,
what's our price of entry?
$50.
$50. So while you can't go to the moon, you can get a 500% return.
Yep.
To me, Nathan, that's going to the moon.
That's insane. Yeah, 100%.
That's ridiculous.
Yeah, 70% profits are nice. But so if you want to increase your max profit,
and what if?
I'm sorry, what?
Well, what I was going to say is you could buy up. So say you do the 12 and the 15, and then on a further out date you could do the 13 and the 16, and so you just every time it goes upside, you're just going to the frickin' moon on every spread that you do. You're getting 500% return, 500% return, 500% return, and the stock only moves 12%.
Yeah. So that's your max. Your max risk is how much you paid. So in this scenario, since we paid $100 for the 12 call, got $50 for the 15 call, 100 minus 50 is 50. So our max we're risking is $50. But like Jason said, our max potential is 500% more at $250. This is my new favorite trading strategy right here. Vertical call spreads.
Especially because now, do you do it going long?
Oh yeah, dude. Today I almost bought a 2-year.
So what strikes are you using?
Well, I try to spread it as much as possible, because the more you spread the two strike prices, the more your profit potential is. I mean, you can end up paying less. You can end up losing money right off the back if you pay more than your spreads. You know what I'm saying?
So you're saying we can trade these humongous Apple spreads for literally fractions of the price.
I almost did Amazon spreads the other day.
Jesus.
Yeah. And those
Why are you not doing UDAO spreads?
Oh, I am. I have a couple. I have a few spreads spread across my portfolio right now.
I'm pulling for you, Nathan. I really am.
Yeah. Well, we got reduced risk and max profits.
I know you got some insurance out there too, so I know you're sleeping at night. I know you're ready to go either way.
I buy weekly puts
in some way, shape.
Is that weird?
Yeah. No, not at all. Not at all.
Fucking cheap.
I like that strategy. Buy the weekly. The weeklies tend to be much cheaper.
Weekly at the monies.
Weekly at the money. Much cheaper.
So
I like it.
Vertical spreads for you.
I like it.
Yeah.
I like it.
I do
Well,
too.
if you have any questions, comments, concerns, suggestions, insults, or corrections, you may email us at rebeltradinggroup@gmail.com. That's Rebel Trading Group with 2 G's at thegmail.com. So, Nathan,
Let's get it.
we just wrapped up a series on options. We did a 4-part series. That'll episode 4 hopefully will be up.
It's going to be up.
It's going to be up before this, so.
Yeah.
But that will be available on YouTube soon. But anyway, so we wrapped up that series. We talked a few topics. We did the calls, we did the puts, we did some spreads, and we talked about some of our favorite strategies. And then we just mentioned another one in our market terminology. So with that being said, I thought of an idea of another series. Uh-oh. And I want to talk the 11 sectors of the market. And today, I want to just break down one of those sectors. And I'm going to let you pick which sector it's going to be. Do you want me to run through them just as a brief little reminder?
No, I can name.
Well, let me break it down for everybody else, just so that they're on par. So there are 11 sectors of the market. Here, we were just about to jump in there without talking about them. If you're new to investing, there's certain sectors of the market, and it's really simply just a gathering of similar companies and putting them together in a sector. And that's divided into 11 sectors. And there's a lot of debate between which some might be. For example, is Amazon retail, or is it consumer discretionary, or is it technology? It's really a toss-up of the three. So let's talk about the 11 sectors real quick. We have energy. We have materials. We have industrials. We have consumer discretionary. That's going to be like cruise lines and shit like that. Amazon, I know, is in the consumer discretionary fund, along with like big entertainment companies. Netflix is in there. We have consumer staples, healthcare, financials, information technology, telecom, utilities, and real estate. So I will post. I'll post those. Write those in the show notes. Yeah. And so which one do you want to get the ball rolling with here? Which one we should talk about? So I want to go over some of the advantages, disadvantages, likes, dislikes, and maybe even some of the funds or top market movers in that sector.
Let's do retail.
I don't think that's actually listed.
Wait,
as one.
I thought you just said that.
That would be under consumer discretionary.
That's okay, yeah.
So you start with consumer discretionary?
Let's get it. So, right off the bat, that's going to be XLY. That is the sector fund of the consumer discretionary S&P, and that's the most commonly traded and most liquid. If you just want to get instant exposure. And just to name off some of the companies that are the top holdings, holy shit, it's mostly Amazon. Yeah.
We have Amazon, Home Depot, Comcast, Walt Disney, and Netflix in the top 5. And just to name a few more, we have McDonald's, Nike, Booking, Lowe's, and Starbucks. So that's just an idea of consumer discretionary.
You consume at your discretion.
I like it as a sector overall because there's a lot of growth potential, but it's also, in my eyes, large blue chip holdings. It's a diverse sector of large blue chip holdings.
Well, don't all the XL series, don't they all do like market cap weighted?
Yes,
it's
that's why Amazon is at 25%. Home Depot at 7%, Comcast at 5%.
So you're gonna see like a bunch of blue chip stocks in there.
Yeah, and I see a lot of diverse ones. I see a lot of very strong companies, and I just named off the top 10. I'm not even looking at the rest because I've done all this before, but I can keep going if you want. Ford's in there, Marriott, Yum Brands, 21st Century Fox. Target,
Makes sense. Yeah.
There's Walmart a lot of big. Who?
Walmart.
I believe so.
Should be.
It's gotta be, right? Have Darden Restaurant, shout out. I actually don't see it in the holdings, but that's weird. We'll have to see where else that is. Interesting. I know it's in the Dow, but that's not a sector. So that's my personal thoughts on it. I like it. Do you like it? What do you think?
I think it's like it's a cyclical industry, right?
There you go, Nathan. I know you're always the bear to my bull. That's why I love you.
So, I just feel like you got to time it right, man. You get at the top of your cycle. It's hard to like hang on to it, you know. I feel like they're like. I don't like consumer discretionary now. I would have liked it like in the 90s, maybe the 80s. Maybe, you know what? It's probably like a good thing to hold just to kind of have some exposure to.
You think it would do well in a booming economy?
Yeah.
Like if you look back in the 80s,
consumer discretionary is what? Is people spending, right?
Yeah. This is like their vacations. This is what they do at home. This is on their way to work stuff, dinner. So if we see like rising interest rates, that means people are still spending. So you'll see consumer like discretionary kind of go up. So I mean, like if our economy is doing well, yes. In a bad economy, consumer discretionary does really bad. I feel like. I don't know, but I would assume that it would, right? Yeah, that seems about right. This just kind of came to my mind. Basically, this sector is just about anything that caters directly to a person. Like not necessarily a business, like a bank, but these are a lot of things that have like products or services that you can engage with. This is like a lot of almost vice stuff.
Dude, I just looked at a 10-year chart, and I'm just realizing we're in 2018, and 10 years ago, and like it was around this time, was a huge dip.
Are you on the 10-year chart on XLY?
Yeah.
What was it at in 2008 during the recession? Because right now she's sitting at $117 a share.
Okay, so her lowest dip, is there NAV you're showing me? Your actual price? I can't tell. It's saying it was around $17 and it's trading around $117 right now.
So that's like tenfold what it's been.
Yeah.
A lot of that growth is Amazon. And
I mean, okay, 10 years ago you're at the bottom of the pit.
Yeah, but the weightings were also different. Back then it probably wasn't Amazon in there. It might have been like AOL or some shit. MySpace. I don't know.
MySpace.
Right. Yeah, these are a lot of like very big, strong companies, entertainment companies. Nike's in there. Like, I like it, like you said, as a long-term hold. It's almost like you could hold this as a mutual fund, or hold this as a long-term, like large allocation of a retirement portfolio.
Yeah, I can't bring myself to just buy a ton of this.
I like the diversity in it.
Well, anything we're going to look up in any sector is going to be diverse. It's a sector.
Diverse. Well, it's true. Well, it's diverse within what it is, but I like how you said that it's very consumer cyclical though, because when people start to have to cut the cord, start to cut the wires, like, okay, well, maybe we should have the cheaper Netflix subscription, and maybe we should not go to Disney World this year, and it all kind of starts to stack up. They start to cut. That whole sector is going to suffer, just like when you looked at that chart in 2008, when everybody got fucked on their mortgage and everybody lost everything and the economy had to fix itself. This hit really hard with the market. And as we go forward in this series, you'll see that some of the sectors got hit, but not nearly as hard as something like this would. So like you said, it is very cyclical in the sense that it's very prone to recession.
Yeah, I'm trying to look at a graph of some of the companies that were around during that time. Oh, come on, Morningstar. Please just give me something easy to look at. Morningstar's become like for the advanced.
Dude, it's not as user friendly.
I just want a chart, and you're giving me a small chart. Oh, show full chart.
One thing I'm not a huge fan of on XLY or that sector as a holding, a lot of those companies don't pay big dividends, and they can, but they don't. Even though they should, but they got a lot of debt, and they're growth companies. But, I'm a dividend fan, so as somebody who likes dividends and constant cash flows back into their portfolio, this might just be a growth play rather than a...
You think so?
Value play. Yeah. Would you say this is a growth or a value fund?
I can't see it being a growth fund. I just don't think it has enough properties to be a growth fund.
Okay, let me tell you this. 25% of it is in Amazon.
I don't think.
Now, let me ask you again. Is that a growth fund?
Or is I guess it is now, but I don't think it's technically, yeah, I guess it would be a growth fund because it's got a bunch of growth stocks in it. But
yeah, Netflix.
I don't know.
I see. If you had to lean one or the other,
yeah, growth.
It does dabble in both. It is on a spectrum. It would be towards the middle, but I would say it leans towards growth. And for someone who's approaching retirement, it might not be a good holding. But for someone who's got 20 years, dude, this might be one of your best holds. And I like to buy things with at least a 5-year outlook.
Yeah, okay. That's a good segue into what I want to bring up. I'm looking at McDonald's right now, which is in XLY, right?
Oh, yeah.
And I'm looking at from 2005 to 2010, McDonald's did well. But from 2005 to 2010, XLY looks like it either ended flat or down or slightly down. So, I mean, like, you got like good companies in consumer cyclical. Like I call, and I think I've heard this on KPP, a recession-proof stock like McDonald's. It's recession-proof. Like you got the dollar menus. Like I feel like Walmart's it's recession-proof. I feel like McDonald's and Walmart together. Coca-Cola, that's got to be in there, right?
That Coca-Cola is actually going to be in consumer staples.
Dang, really?
Yeah.
That's weird.
Well, they're a beverage company.
So
and they also, I think they have some food divisions.
I wouldn't be surprised. I wouldn't be surprised if Zephyr Hills was in a consumer staple, but I don't know. Maybe I just don't understand the industry correctly.
Well, we're going to revisit that one because that's another one of my favorite ones.
But yeah, like certain stocks inside like XLY, like they can be recession proof. So like during bad cycles, sometimes the stocks inside there do good. So the whole industry, I'm not harping on the whole thing.
Mm-hmm.
But on an average, I just don't really like it that much.
So at the end of the day, Nathan, are you buy, sell, or ignore? As a trader that you are, would you trade this sector? Would you think, I think the market's going to pop. Let's check out consumers.
No, absolutely not. Well, I guess since it has Amazon, I guess maybe, but like I would just play Amazon.
You can use it as a play on Amazon.
If I was going to do that, I wouldn't have any other shitty companies hanging on with Amazon. I would just let Amazon do what Amazon does.
So at the end of the day, it's not part of your retirement portfolio.
Exactly, yeah. So I would hold on to it long term. Sure, why not?
At the end of the day, I would hold it. I like it as a 10+ year. That's the kind of investor that I am.
If you're gonna do it, hang on to it.
Don't trade it. Own it.
Yeah.
Do you wanna wrap it up, or do you wanna go over another one real quickly?
Let's wrap it up. Let's do an 11 part.
Okay, we can do an 11 series. We've already been on for.
We could do like shorter episodes like this. Yeah.
Quite some time. Yeah. So. Anyway, man. Well, I'm gonna have you go first because I've been just off the grid. Thank God. And you're going to have to just give me a few minutes in order to find what I'm watching for the week.
All right, let me pull up my stock. You know what? I'll go ahead and say I said it today. I think I said it today. I'm gonna be watching Apple.
Ooh, why Apple specifically?
Okay, so I bought the string. I didn't buy the string. I bought the vertical call, so I'm bullish. I bought the vertical call yesterday or today? Yeah, I bought it today, and I just want to see that motherfucker run.
I think she's gonna, man.
I don't. Yeah, I hate to say she's not.
Real quick, I saw an article. I'm gonna see if I can pull something up real quick. I saw an article that said Warren Buffett claims Apple's investment in Tesla is foolish. Are they doing it?
I don't know.
Well, you know that they're. I got that email on last episode. It said Apple hired scores of Tesla employees. Maybe there's some side deals going, man. Maybe there's some cross collaboration. Let's put Apple computer chips in an energy efficient vehicle. I like it, dude. I think it's revolutionary. And if Apple's willing to put their cash hoard to work,
here's the thing,
dude. What if Apple takes Tesla?
I don't know.
What's the book value?
Well, aren't they doing like automated cars already? There was in their secret facility or whatnot.
Yeah, but what if it's all part of the plan? What if it's already there? Jesus, can you imagine?
Funding secured.
That's such a Trump tweet.
Yeah, little asshole.
He outdid Trump that week. That's funny.
Yeah, like Apple, they already got like Apple integrated fucking displays in cars. Like you can talk to Siri in some displays. Did you know that?
Yeah, that's true.
So a move to Tesla would be something they got to break contracts, I guess. I don't know. What are you watching?
Well, just because I've been there, done that this week, I'm watching Carnival Cruise Lines.
Nice.
But no, I mean, I was able to pull up a chart and kind of justify a position. Past 3 months, she's had a strong kind of, I wouldn't say run up because she's still not back to her highs, but she's approaching her highs for the past year. She's at 6150 now. Her highs, her highs were near 70 in the January, and then it all came tumbling down. But I want to see if she can kind of break through this lull after this little push up over the past several months. So
nice.
Let's see what she does. I still think she has a lot of value. She's definitely growing. She's adding more ships every year. I like it as a hold, not a trade.
I'm looking on Apple website right now. It's called Apple Play or CarPlay. I don't see Tesla on there. Like they have fucking Mini Cooper, Mitsubishi, Mazda, Mercedes, Land Rover, Kia, Jeep, Honda motorcycles, Fiat, Ford, GMC, Dodge. I'm sure Chrysler's. Yep, Chrysler. Yeah, Dodge, Jeep, Dodge, Chrysler, Cadillac. So, I guess you think they're just adding Tesla to CarPlay?
Could be. They might be adding a little bit. I feel like they would kind of do that and then a little something else.
If you're right, and Apple becomes a
you just see, am I right? You're just laughing, just thinking about it. Holy shit.
Huge.
If Apple became like the car company, God.
Enjoy that debt. You gotta take on that debt. Right? You buy the company, you buy the debt.
Dude, Apple's got a cash hoard, dude. Humongous cash hoard. I think it's like they hold like 9% of their market cap in cash at all times. I heard something along those lines, which means they would have close to like 200 bill just sitting and chilling.
Excuse me.
She still pays like a 2.5% dividend, dude. Let's go.
Apple?
Long Apple. What are we doing?
Dude, I bought Apple a while ago. I bought Apple around like 190 90. I want to say it was like 119. There was a 9 somewhere. If it was 119, I'll shit myself. I'm gonna look.
Anyway.
Everybody just hang on. Everybody just hang on. Put your seatbelts on. We're not done yet.
No, it's my turn. It's my turn. Shut up.
I bought 2 shares at 185, and it's at 220, 227 right now. Long Apple. Long as fuck Apple. So that's it, man. That's the podcast.
Where can they add us?
You can find all of our videos, or except for 1 or 2, at youtube.com/Rebel Trading Group. If you have any questions, comments, or concerns, please email us. The best way to email or contact us is to email us at rebeltradinggroup@gmail.com. Email us. Listen to me, people. Email us at rebeltradinggroup@gmail.com. We're also on Soundcloud/Rebel Trading Group. Our most recent, is it 4 or 3?
Say it again?
On SoundCloud.
4.
Our most 4 recent episodes are on SoundCloud, so hit us up there at Rebel Trading Group. StockTwits.com/Rebel Trading Group. Hit us up on there. Hit us up on Facebook.com/Rebel Trading Group. And yeah, that's it, man.
All right, man. Unfortunately, Labor Day.
Yeah.
So enjoy it. Take it with a grain of salt. Market's gonna be closed. Yeah, I'm working. I'm working too. It's all right. We gotta do
Labor Day. I don't know what Labor Day is.
Yeah, it's okay. It's all right. Enjoy it. A lot of people use it as a benchmark for the end of the summer. Another winter approaching. So here we go, boys. Anyway, you have to wrap it up now.
Well, without further ado, is it Monday yet?
Do you mean, is it Tuesday yet?
Oh, is it Tuesday yet? Damn, fuck you, Labor Day.